All right, welcome to day 4 of our Forex Basics. Today, we're going to talk about an introduction to technical analysis. It's going to be a brief overview of the different concepts, indicators, and strategies used in technical analysis in the financial markets, specifically focusing on the foreign exchange. So let's go ahead and hop into the information, folks. My name is Randy Webb. So if you're hearing this for the first time, just know that this is day 4. We have 3 more weeks to follow, focusing on different titles and different things and aspects of Forex. So like I said, today we're going to talk about the concepts, indicator strategies using technical analysis. So when it comes to understanding price charts, okay, there are different type of charts. Now we're going to get into the real market to show you this on the TradingView platform. But when we're looking at charts, there are different type of charts, okay? Most of the charts that everyone is used to looking at are candlestick charts. Now, there are different type of charts out there, and we're going to show all of them today. And you just choose which one may work better for you, okay? You have a line chart. Some people like to use a line chart. You have a bar chart. You have traditional Japanese candlesticks. And then you have the point and figure chart, okay? Then you have the different time frames, which we talked about in our last class as well, too. You have your intraday. You have your daily, okay? Most of the time, I depend on daily. You have your weekly. You have monthly. And, of course, when we talk about intraday, we're talking about your 15-minute chart. You have your 30-minute chart, you have your 1-hour chart, you have your 4-hour chart, and then we get to our daily chart, okay? And now when we use our intraday charts, those are for us finding opportunities within the day, right? Smaller look into what we're trying to find. And in these charts, what we're looking for are we're looking for uptrends, we're looking for downtrends, and we're looking for when the market is moving sideways, right? We say the market moves in 3 different ways: up, down, sideways. And you got to determine which way it's going to go and how you want to enter the market. And so we talked about our support and resistance levels. Okay. We also talked about demand and supply zones as well too. But today let's focus on support and resistance levels. So support and resistance levels refers to price levels on a chart where the price tends to find support and resistance as it rises and falls, okay? Support levels indicate where the price may stop falling, right? It hits like a floor as there is buying interest at those levels. So basically, okay, when price hits support, hits the floor, okay, that means it was selling, boom, just right here. So let's say that price was coming down here from resistance, price is coming down, boom, it hits support. Well, this blue represents buyers. It's where buyer contracts are sitting. And so if there's more buying pressure than selling pressure here, it's going to go up. How do we know that? So we will say that the market is mixed up with M's and W's, okay? It's going to be W's at the support level. So you had here, boom, 1 touch point, okay, came up to resistance, 2 touch points. Okay, we knew from here that there were buying pressure. And if it didn't get all the buying pressure here, okay, pushed up, hit resistance, came back down, this was an opportunity for me to go in for a buy here, okay? Stop loss here, boom, catch all of this on the way up. And same here, okay? If resistance hit, we're looking for M's and W's. So we go here, 1 touch point, okay? Closer touch point, or that's a touch point, right? But boom, we enter the trade, stop loss above, comes down, capture all that in profit, okay? Hits our support zone. Okay, M's from resistance, W's for support. And so this is a very simple strategy, okay? You'll hear people say double tops and double bottoms, all right? So once again, support is where price is met with buying pressure, okay? So it's where price stops falling as there is buying interest at those levels. Resistance levels indicate where the price may stop rising as there is selling interest at those levels. So once again, price is rising, boom, there's selling interest here. People are waiting to sell. And if the sell overtakes the buying, boom, we get our drop. And that's all that it is. So besides the banks, these are mostly retail traders looking at levels like this, okay? Now, when you talk about institutional trading, we look at something else, and we're going to have that class too when we talk about institutional trading, what they do differently than what it's done here. And you see massive moves. And this is what we're looking for. You know, you may say, well, I don't want to look at smaller resistance or support levels. I want to look at supply and demand levels, right? Your demand levels is where buying pressure is at, is where it's a demand for that currency. So if price is dropping, this was a big demand zone. Okay, you have a lot of buying contracts sitting in here. So price comes here and it makes a huge move up. So we go from this area, goes all the way up, right? So when you have large shifts, you have a demand zone, okay? When you have large shift down, you have a supply zone, okay? Supplying it. All right, so here we go. So key events that got us here in the technical analysis world. You're going to hear me talk about Charles Dowell as well, too. This is where really technical analysis started. Just a little, put you in the weeds. give you something to geek out about and go research. But in the 1800s, early technical analysis started focusing on tracking stock prices and volume. Okay, volume is a big deal. It's what makes the market move. In the 1930s, advances in computational power enabled more sophisticated statistical analysis of markets. Now today, it's even better, right? You know, we fast forward to beyond 2000s. You know, we're dealing with artificial intelligence now with computational power or computer power, basically. So in the 1980s, we had an introduction of personal computers, made technical analysis software widely acceptable. And then obviously we've well advanced now. And so we talked about trends, okay? Trends, like I said, the market moves in three ways only: up, sideways, and down. All right. So, and we determine those phases of our trading so we can determine whether we're going to go in for a sell, a short, or we're going to go in for a buy, a long. Okay. Or we're going to buy in between consolidation. And so here's where an uptrend, like we talked about before, an uptrend is met with, you know, you have your low, you have your high, you have your higher low, right? That is higher than this previous low. And this is what determines whether we're in an uptrend, okay? Then we have another high, which we call a higher high, and then we call this our higher low. So this is an uptrend, all right? So it shows upward sloping line connecting several minimum points. Now, I don't want you to get confused, because we're showing this perfect uptrend line. It doesn't have to touch. Let's say this came down to here, okay? That's still an uptrend, because why? This low is still higher than that low. Then let's say price popped up, okay? As long as it popped up higher than this high, let's say it came here. Well, that would be a higher high because it's higher than there. And let's say it came back down, it broke the line. Maybe it stopped here. It's higher than that high, or it may come closer, okay? It's still a high, a higher low, okay? So that's what determines. So the lines are cool, but most of the time I like you to put your text so that you can see exactly where you are in the phases of your trading. And then of course, when price is a downtrend, so you see here, price is moving sideways. And then what happened? We had, boom, the pop up creates the high. Okay, so that was low, creates the high, comes back down. Okay, we won't call that low because we have a low here. Once it breaks structure right here, it creates that lower low. Okay, and then our next lower high, okay, then our lower low, lower high, and so forth. So therefore, we have a downtrend. And so when you're seeing consolidation, for example, when the market is moving sideways like this, it's a demand weakness is what they call it, right? Delay in new buying, okay? When you have a delay in new buying, obviously, it's going to be selling off. So if they're not buying, they're selling. Or if they're not buying, right, because price is not reversing, price is not moving up, it's likely that we're going to get a drop. And this is why you'll see there's a lot more selling in the foreign exchange versus buying in the foreign exchange. Or you might find that you're more comfortable in buy situations versus sell situations. So, but anyways, this line chart with a downward sloping line connecting several maximum points, like I said, this is based on lower highs and lower lows is what creates a downtrend. And then you have what we call breakouts. Okay, we're going to talk about this today. Flags, corrections, breakouts. So within every chart, there's a trend. Okay, so on your daily chart, you could have a downtrend. Within your 1 hour chart, within the daily chart, you can have an uptrend leading to a resistance point or so forth. Okay, we're going to break that down today. But what they're showing you here, let's say you have your perfect line drawn. Okay, we have this channel, we call it. And then all of a sudden, outside of that channel, you get a breakout. Boom, break. It comes retest that same support, because this was a support line. This is still a zone as well, too, even though it's diagonal. And so it breaks that trend line. It retests. Okay, some people will enter the trade. Now, me personally, I have to see if I want to know that it's going to create a lower low, okay, and go into a downtrend. I wanted to break this previous area here. So if I was looking for an entry area, okay, I would draw a line across here. And when price broke this point and retested this area, I would enter in. Why? Because we're now going to enter potentially a downtrend. And we'll talk about how to identify when you're going to enter an uptrend or a downtrend from certain candle patterns that we'll talk about today, like a head and shoulders or double tops and so forth. Okay. And so when we're looking for an ascending channel, okay, it's an uptrend. So price containing within upward sloping parallel lines indicating an uptrend, okay? When you have a descending channel, that means price is staying within a certain channel. You draw two parallel lines upwards or downwards, okay? It's staying within those lines. Now, that's retail stuff, okay? When it comes to institution, they don't care. You're going to see prices go all type of ways, right, when big money enters the market. But a descending channel, price contained within downward sloping parallel lines, indicates a downtrend. And then you have your horizontal channels, okay? Now, horizontal channels, I love finding those. Why? Because we know at some point price has to make a decision. Price has to either begin to go in an uptrend or a downtrend, and we need to determine which way it's going to go, or use our training, right? Break and retest type training, for example. When it breaks out of a channel, then we know to enter the market, boom, put a stop loss below or above, depending on what we're doing. But a horizontal channel, its prices contained within the horizontal parallel lines, indicates a period of consolidation. All right, we're going to show that phase of trading today as well too. All right, so let's look at some common chart patterns. You can take a picture of this right now if you like. The head and shoulders pattern, okay? Remember we're talking about, now all of the head and shoulders is, if you didn't know this, is basically when an uptrend is shifting into a downtrend, okay? And so boom, we were in an uptrend, boom, we have our first shoulder, okay? Now you're gonna see it as a higher, so this is your higher high, okay? This is your higher low, and this is your final higher high. Now, when price fails to make a higher high, okay, this is when we start looking and say, oh, we may be shifting in our phases. Okay, so uptrend, hit our first shoulder, which is a higher high, okay, and then our higher low, our last higher high, and then what will we get? We don't get another higher, we don't get a higher low, okay? It now hits a support level. Right now we have a support zone here. Right now we had to make the determination. Is price going to continue upwards? Because it can. Just because you see this head and shoulders does not guarantee that price is going to shift down. Okay. Now, the patterns more often than none, it is an indication that we're shifting into a downtrend. Okay. But boom, price comes and hit the support level here, goes up, creates the second shoulder, and then boom, it breaks our zone. It retests the zone, and now we can enter the market here, stop loss here, ride the trend all the way down, depending if you're intraday trader, swing trader, so forth, how long you're going to hold the position, right? Once it creates, so boom, you have your initial high, okay, it comes down, you have your lower high, your lower low, okay, because it's lower than these lows now. So it's your lower low, so it breaks, creates a low, lower than that low. Then boom, it creates another what? A lower high. Okay. If you are already in this trade from here, boom, it creates that lower high. You put your stop loss and profit right here and you let it continually drop. And then you just get what it is that you're getting. And every time it creates a lower high, you put your stop loss right above it. Okay. If you're going to swing the trade, some people me personally, I like just close my trades out now and then re-enter the market at the lower high if I'm going to sell again. All right, so that's your head and shoulders. Here's what you call a cup and handle. You're going to see this often as well too, giving you indications of potential sells or an upward movement. But basically, it's an image of a cup and handle chart, which a stock chart with a rounded bottom cup and ascending channel. And so you'll get this, and it may increase up. So we'll talk about this a little bit more as well too. Oh, let me go back here. You also have your double top patterns. We'll show this. We're going to do this in the real market. We're going to talk about flags in the real market. So here's a flag here. We call this a rising wedge, which what typically happens. And it depends. You see how they have the volume here? When I talk about divergence. So you have the rising wedge. This is actually an indication not of a continuation pattern, okay? Because we have volume that is descending, it's letting us knowing that buying pressure is getting weaker, so therefore we're going to get our reversal, okay? So an image of an ascending, descending, or a symmetrical wedge chart pattern bounded by converging trend lines. So here, lets us know we're going to go into a sell. We're going to get a drop. And of course, you have your traditional support and resistance. We're going to talk about trading the triangle as well too. This is a rectangle, but we're going to talk about trading the triangle as well too. But between support and resistance, you can actually buy and sell in between these zones, depending on what pattern you're using. Okay. All right. So now looking at some real quick, standard indicators. We're going to show you I'm going to show you all of these in real life. Okay. But your moving averages. Moving averages smooth out price data by creating a constantly updated average price. Now, common moving averages used in technical analysis are typically your 50-day and 200-day. On my chart, you're going to see a big purple line. That's my 200-day moving average. Okay, and then you're going to see for me, I think I used 50-day. It's my yellow line. Now, a lot of people use these as if your 50-day crosses your 200-day. A lot of people use that as an indication of trend change as well as going into a trade. Okay. Now, you can use confluence. What is confluence? Using multiple things to determine what direction price is going to go. And so you can use your relative strength indicator. If you're looking to go into a sell, for example, your 50-day crosses up over your 200-day, okay, one indication, your relative strength indicator, it's oversold. So you're looking for the buy opportunity, and then you get your MACD crossover to the upside, right? All of these indications may indicate a buy for you. But of course, you'll need to back test that to see if it works for you. Now, relative strength index. The RSI is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought and oversold, right? When something is oversold, eventually, buyers got to enter the market, okay? But don't use this as your only indicator because, listen, sometimes price will continue to be oversold for some time. And even though it's in that oversold area, it can stay there for some time, okay? Now, MACD. The moving average convergence divergence. Remember how we talked about convergence and divergence? Divergence or convergence, right? Telling you when price is going to reverse either to the downside or upside. And so I'll show you how to identify divergence on those charts as well too. Okay, this is the perfect thing to use it for. Why it shows you the volume and it shows you kind of your RSI mixed together. But it gives you the relationship between two moving averages to identify momentum and trend changes. Then you have your Bollinger Bands. A lot of people like to use Bollinger Bands. Bollinger Bands plot bands around price to identify high or low volatility and potential support and resistance levels, okay? And then you have your stochastic oscillator. The stochastic oscillator measures momentum by comparing a security's closing price to its price range over a set period of time. So a lot of people use the stochastic crossing, for example, to enter a sell or a buy. So, when the moving, they call it the moving D, when it crosses up over the other line, okay, it's an indication of going into a buy. Now, we'll also talk about the Ichimoku, I call it the Ichimoku cloud, okay? The Japanese strategy that basically at first glance, you can just look and go into a trade and it gives you everything that you need. So we're going to go heavy over that as well too. Just some extra information history. Charles Dow is known as the person who founded, of course, the Dow Jones, but also analyzing charts and different theories, okay? So we'll talk about those theories as well. And then you have your trading strategies, okay? Some popular trading strategies based on techno analysis are trend trading, okay? That just means, listen, you're going to ride the trend up. It's easy to do. When you figure out how to identify an uptrend and you find an uptrend from the beginning of its existence, okay, you ride that trend all the way up. Maybe you might be in a daily channel, for example. Well, on that daily channel, you can ride an uptrend up and then you can ride a downtrend down. And that's simple. You're going to you go to your daily chart, you find that consolidation zone, okay? You work within it, you go to your 15-minute or you go to your 1 hour and you identify your trend and you ride it all the way up and you ride it all the way down. You use proper risk management to ensure that, listen, this can be very simple. Okay, let's say you have the 200K account with a firm, okay, a regulated prop firm in your area. Well, if you have a 200K account, okay, you're not trying to do 200K things. Maybe you just want to make simple withdrawals. Okay, so you put in a reasonable lot size. Let's say you do a standard. Okay, a standard is $10 per pip of movement. Okay, so you look for a 20 pip to 30 pip movement. You just made $300. Well, guess what? That's not a big portion of your account. You have in certain accounts, for example, they say you could have the max of 5% a day. Okay, of drawdown. What is 5% a day of drawdown in a 200K account? That's what 10% is 20. So $10,000. You can have a drawdown of $10,000. So we're using $10 per pip. That's a long ways. So you have time to let your trade breathe and do what it's supposed to do, okay? Once we go into swing trading, all right? So swing trading is basically holding on to your trade for a long position. So maybe let's say you're doing, the market is bearish, so you go into a short position, you hold it for several, lower lows and lower highs, and then you take profit, okay? Swing trading aims to capture gains from intermediate swings in stock price movements, okay? All right, so our next thing here. And then we'll talk about this tomorrow. We're going to actually get you to help you set up your first MetaTrader 4. If you've never set up a trading platform on your desktop or on your phone, we're going to show you exactly how to do that tomorrow. You have MetaTrader 4, you have NinjaTrader. There's other traders out there as well, too, that they're coming up with. I think one just got released. We'll talk about that one as well, too. So we'll get all of these platforms set up tomorrow. So make sure you don't miss that one. And then lastly, when you're getting started, here's your trajectory, okay? You're going to learn the basics. That's what I'm teaching you right now. So start by learning the fundamental concepts like support, resistance, trend lines, and indicators. Then once you learn that stuff, okay, I want you to go into these trading view, and you're just going to back test. You're going to say, okay, I would potentially, here's my markup, here's my downtrend, here's consolidation. Okay, here's the trade I would go into. Okay, you call this paper trading, and you go and draw it out, and you put the trajectory and see how accurate you are. Okay, and you log that into your book, and you keep doing that. And if you have, let's say, a 50% accuracy rate, and you are doing proper risk management, meaning you're putting stop losses there, count the ones that you take a loss on, and then count the ones you take a win on. And then once you realize, like, oh, I would be profitable with doing this, now you can do this with a demo account, okay? But once you realize, man, I can be profitable doing this, then we shift to a real account. Or you might choose to say, you know what? I still want to try it on a real account, but what I recommend is just make sure you're using some type of prop firm account, that's regulated with inside your area. All right. So paper trading is just practice executing trades within a simulated account before using real money. This is smart. Okay. This is very smart to do. Okay. And then implement your strategy. Once you realize you're doing good at it, you realize you've mastered risk management, you mastered being able to enter your trades correctly. Okay. You start executing actual trades with your tested strategy and define risk management rules. Okay. And then you continually review your trades, your strategy performance, and then you'll make adjustments as necessary. All right. So here's what we're going to do now. We're going to go ahead and go into the information here. All right, so that was our academic class here. Let's go into the information here and pull up TradingView. So if you already received value, definitely drop some 1-1 in the chat. Lillian, you said, is there any way we can get these notes? Loving the depth of the information here. I apologize. I'm literally just talking from my experience when it comes to looking at the slides, right? But I am going to make the slides available to you. What I'll do is I'm going to create a Google Doc that is password protected. You'll be able to go into that. You will not be able to download the slides because it's going to be protected information, but you'll be able to go in there, look at the data, write it down, and so forth, okay, and track it that way. So that's what we will allow. So, all right, let's go into our technical analysis. Now, remember, if you want more in-depth training with me when it comes to technical analysis, remember I have my one-on-one sessions at randywebb.com. You can go to, it's my FX consulting. Feel free to do that. You'll get 60 days complete training with us in the market, not only just going through academics like this is our free content right here, but our paid for content, okay, we're actually in the market, trading, learning, taking positions, okay, and then of course, you get to text me all day long about, what you think or what you're looking at, or if you need us to analyze a chart together, you'll have access to do that as well too. So I'll be actually your personal trading coach, all right? So let's go ahead and hop into this information here. All right. Here we go. We're going to go over our GBP USD. I just seen it reverse. We're going to talk about that. This is going to be a good thing to talk about here, technical analysis wise. So we'll talk about, we're going to talk about the charts, what we went over, but let's go over this trade here we talked about here. Okay. It never really broke, right? Now, if you did enter this position, so we'll see what you see where market transitioned here. Okay. It only went down. Now let's go to the 15-minute. And this is why we must be careful, right, before we go into a trade. This is all a psych out. Price moved sideways this entire time. Okay, so it looked like a flag initially. Okay, it went through this trend. Okay, still, here, what's crazy? Now, this is what's going to be crazy. Some of you are looking at this. Are we in an uptrend or downtrend? This is a very tricky one, actually. Okay, this is where you determine, are we in an uptrend or downtrend? We have our high, we have our low, we have our lower high, we have our lower low. Okay, this is all that we have right now. We didn't create any additional lows. Okay, it did come into profit a little bit. Okay, so it came into profit by, if you had entered, let's say if you entered here, so the price kept moving, and you entered at this area here, yes, you would have caught these pips here in this breakout. Okay, we're going to talk about trading the triangle. This is what we mean right here, trading the triangle. Okay, but the truth of the matter is this, because it's not about this line. Let's get rid of this line here. This was my breakthrough right here, and I'm going to show you guys. because I was getting confused. When I first started trading, you would draw this line, price move outside line. You're like, oh, what is, okay, price about to change. No, we don't know what price is at yet. But what we do know is this is a high. This is a lower high. I'm sorry, this is a lower low because lower than this previous low here. This is a uh, lower high because it's lower than this high here. This is a lower low, okay, because it's lower than this low here. Okay, how we create any more lows? No, right? Price stayed above here. Price is up here, so no lower low, okay? But have we created any other additional highs? No. Okay. So when we're really looking at this chart, and this is where, man, I remember my breakthrough. This was an aha moment. Okay. So I'm gonna mark it out so you guys really see it. Okay. Obviously, we're gonna call this a higher high. Why? We're gonna just tell me, you just gotta explain exactly what you see. Why is it a higher high? Because it's higher than this high here, it's higher than this high here. There is actually an uptrend happening. That's a higher high. Okay. But then we shifted down to this was our, because this is probably the initial, yep. So we call this was a higher low, okay? Then higher highs, and then we have a lower low, lower than this previous low here. So let's go ahead and mark that. This is our lower low. Just call it what it is, okay? Don't try to make it anything other than what it is. This is a what? This is a lower high because it's lower than this previous high here. So we put our lower high here, okay? And then what do we have? We have another lower low, right? So we have another lower low here. Now, where's our next lower low? Do we have one? No, right? There's no lower low. So we haven't got our continuation. Okay. Question. Do we have a higher high that's taking us out of this position? This is our low, this is our lower high. So for price to really change directions, the truth is this. Anything else is us taking a chance in this area, right? Because we still are in a downtrend. So if I ask, we're still in the downtrend. What's happening is this is where retail traders get tricked. Okay. Because you're like, oh man, price reversed. No, price is not reversed. Okay. This is still a lower high. Okay. That's our lower high until it breaks. That's a lower high. And I know this is where now we don't have anything else here. Okay. Now we could say this was a lower low. This is a higher low, but we can't say that because we didn't create any highs yet. So we had the lower low. No high has been created. So I can't say that this is a lower low, a higher low. Okay. It's just price in a flag still moving up, doing crazy things, of course. Okay. But now we have our lower high. Price is reversed here. And so what do we need? We need price to actually break here to create our next what? Lower low. So price has not broke yet. So will it? I don't know. But here's what we're waiting for. We're at for our next lower low for our continuation of our trend. Now, this is a very ugly looking trend, okay? But it's still a downtrend, okay? Now, so we're looking for, so let me just, I want to make sure this is very clear. Boom, boom. All right. Yes, it is ugly, but this is it. So what we need structure to be broken here, right here. So once it breaks here, you might get a break and retest because this is a zone area. This is a zone. It breaks here, retest, you going for the sell. Okay. If it never breaks here, obviously we don't, because if you enter here, you're gonna be taking a risk. Okay. This is a risky trade. This is basically gambling. So if you want to take for sure trades, okay, there's no guarantees, but you want to be more sure yourself is boom, take the trade here, stop loss goes above, and then we look for the entry to go for the rest of the now wait. Exactly what we taught here, right? The same thing. Okay, now here's the other deal. Wonder if price doesn't do that. Well, we need price to break this lower high area. Okay, so this is a zone. So we take this all the way across. This is resistance, a resistance area. Okay, so now we wait for price to break here. Okay, because that's our lower high. So when price breaks this high, then what? Now, once price closes above the high, okay, it may come back down to retest. Never hop in. If you see price just go, and this is what will happen, because a lot of people may be waiting for this break and retest here, okay, before entering the market. Okay, so it's either price will break here or price will break here. Okay, price break here, boom. We're no longer in our downtrend, our initial downtrend that we're in. We may now be possibly entering what? We're entering an uptrend. So what price breaks here, it retests it, or it may correct. But if it now we have our next high, so that becomes a high. And if it creates a low, guess what it does? Now we have a higher low. Why? Because it's higher than this low here, or it's higher than this low here. So boom, we create a higher low. And then we wait for that break again. Boom, our higher high. And then so forth, we're in our uptrend. Okay. And that's trend trading. You ride your trend up. Okay. See if you guys got questions here. You don't have to trade using indicators, but I'm going to show you guys. First, I want to show you naked charts, and then we're going to show you indicators. Let's see how far. I'm answering your questions right now. How far back do you go to monitor the highest high and highest low? I mean, you always. We're going to talk about a top-down analysis, okay? So me personally, I'm always going to start with either the daily or the weekly before I even attempt to go into any trades, okay? So now let's get rid of this. So we just created all this, right? Let's look at the big chart. Now, if you are a swing trader, you're looking at the daily. So really, did anything really impact? So we're trading this little small thing. If you're trading this on the 15-minute, we're still really in a downtrend, aren't we? Well, we're not in a downtrend per se. This was a double bottom. So price didn't stay here. It rejected off of this support zone, this floor. Okay. We had a floor right here. Price rejected. So on the big time frame, we had our M here. Boom. Boom, price came off of here, rejected. It's coming back up. So yeah, we could have bought based off this daily coming here. Now what we're expecting now, if price comes, remember we talked about the break and retest, but at the same time on the daily, if we don't get it engulfing potentially, I'm not saying the price can't reverse. If this doesn't become an engulfing, meaning today, if price doesn't close above here, there's still a potential that this is going to drop, right? Because we're still at the higher high on the daily. So this is still our higher high on the daily, okay? Even though we have a trend here, this trend is just going to this area, okay? But we have a true higher high on the daily. So for those looking for huge moves, okay? Once again, this is going to be based on risk management as well too. If you're holding a position and you do a small move, a small lot size, then you may be holding this to swing it to catch this all the way back down. So you're looking for an actual bigger position. Let's talk about that price zone. So you're maybe looking for bigger position. So you see this support and resistance area. So price may come up here, hit it, and you're looking for that drop here. So we all are looking for different things depending on what type of traders we are. So you may have someone that is in a sell right now, and then you have someone who is in a buy. Someone may be in a buy for the short term, okay? And then someone's in a sell for the potential long term that they're expecting to come here, okay? Break this lower high. And so they're swinging the trade, and they know that it's probably going to come to this support. This may be they're out here, okay? Or they may, I mean, that could be way up here too, but you're expecting to catch all this. So now we're talking about, what is 120 pips here or lower, okay? To the next support zone, you're talking about 168 pips, okay? But it all depends on what type of trader you are. You see prices dropped immediately. You see that? Oh my goodness. Let's look at that real quick. What just happened? Or it felt like price. Okay, so price is retracing right now. So that what we see on the daily is being retraced right now. Okay, but at the same time, price may still shift up in this area, but just know when you look at the daily, this is the overall view. So see, I have this zone right here. This is like a support resistance area. This is where price closed out. When it came back down, this is where price opened up at. So this is more likely where price can potentially close at. So let me go back to the 15-minute now, see where that green line is at. Right here. Man, isn't that something right there? Okay. It came right to that zone. This is our green line that we set on the daily. And guess what? It rejected right off of it. So this is why you see that wick. The wick is down here right now. So let me go show you what we're seeing. This is the daily candle. This is that wick right here. This is the price that's now shifted down, our sell, okay? So it may shift down for a little bit, then it's going to go back. It may go back up. So you're going to see this tank fill back up, okay? But it rejected directly off of where a position opened at before. Isn't this is something else, right? But that's how you see. So this is how people trade support and resistance. So it hit off that zone. Let's say you start selling there because you felt there was going to be a price movement, okay? Let's go back to the 15. That's our green line. This is what we're seeing. Okay, that zone it rejected off of. And that's just all that trading is. And when you get good at one of these, okay, you start making these moves, you can do back testing and see how far the trade goes every time it rejects off of a zone. That's about 20 pips. Okay. And what you're seeing when you talk about this is on balance volume. Yeah, anytime there's more when there's more volume, that means there's more buyers, and that means price is going to shift up. Exactly. Okay. But when you start looking at this too, okay, you see how price is shifting down, it's not shifting up. It's also letting us know now we're going to get into our indicators. Okay. We have volume here as well too. Okay. So price, if we expected it to go up, price would actually be, we would have more green going up. That means we had a lot of buying pressure. Right now we don't. Okay. Selling and buying is going down. So eventually we're going to get a drop actually. And that's what you're seeing here. All right, so let's look at some of these indicators here. All right, so we talked about, today was about indicators, and we're going to reset this whole chart, remove all drawings. Let's get our chart set up. Okay, so the first thing, when we're looking at our charts here, these are the different instruments you can type in. Go to tradingview.com. You can get a free account, okay? And then you can create your watch list and all that good stuff. So here's what we're going to talk about. Let's look at indicators. So the first indicator we're going to look at, we talked about moving averages, okay? All right, so let's go and bring up moving averages here. So we're going to go over here to indicators. We're going to find moving average. And so you have simple moving averages. And they're based on just how they calculate the periods. But we're just going to we now use an exponential. We're going to use a simple moving average. All right, there goes our moving average, right? And then what you want to do is we want to set the indicator. We want to set it to 50. So that's a moving average. Let's do the inputs. So we want to set it to, actually, you know what? Let's find one that's already done. So they already have, so this person already has a strategy, right? They have the moving average 50 plus to 200 because this is the standard. So you can actually just click that. They already have it there, right? So this is your 50. You can change the colors if you want. You can change this to like there we go. I like to do change that to blue. Actually, no, I'll change that one to red. So this is our 50 right here. The red one is going to be our 50. You can have these any colors that you want. I'm just doing this myself. We're going to change this one. I typically have this one purple is what I keep it at. Make it thicker. Okay. So here's your moving averages. Now it's a lagging indicator. Why? You see prices already broke above the 200 and is retesting it. Okay. So without us even looking and drawing zones, okay, because typically what would you have done? You would have drew a zone. Right? This is pretty much a zone right here. You'd have drew this zone right here. When price is above, I always like to just draw green when price is above. All right, so here we go. So without having to draw this zone here, okay, it automatically gives us, we have our 200, and then we have our 50 moving average, which when it crosses, this is where people say you can go in for a buy, right? When the red cross or when the 50 crosses over the 200, it's a buy. And when the 50 crosses down, the 200 is a sell. So let me show you this. All right, these are all the different strategies that people use with their indicators. And you can back test all of them. Just see, and sometimes it may lag. So obviously you see way up here, this is where you really want to catch it at. But here's what you need to know. This was well above the 200, and it was overbought. So I'm gonna show you several confluence things that showed us this is gonna happen. Okay, we have divergence, we have convergence, right? So prices move, the strength is moving downwards. Means strength, we're losing strength. Okay, it was well above the 200. See how price increased here? But our RSI, now we could also look at our volume. Let's look at our volume and see what volume look like. I use on balance volume. Same thing. Let's see if we have anything here. So it actually showed volume was good here. Volume went in. So nothing crazy here. Now, also, we're going to talk about we're going to talk about our MACD. Let's use this one. This is our stochastic. So we have it here too. You see this? So price crossed over. Once again, let me give you, see this crossing? Price crossed, this blue crossed the red right here. And you could change all these to where, like I like to make my stuff when either red crosses over every time. So you just, and do it for yourself. So I always make it to where whatever's going to cross is going to be a red line that crosses for me. Okay, that's how I like to set up all my charts. Make that one blue. I'm just going to make a blue line thick, red line not thick. So now when red, actually none of them thick. Too much. All right, so now looking at this, right? So this is why I talk about different strategies. So when our red crosses under the blue here, okay, potential for a sell. Now we see that obviously this is not what we're looking for. That would have been a small time, okay, but it is oversold, okay. See, price came down, crossed back up, price went back in. Now here's the best part with this. This literally is showing us price is moving down here, right? Price is moving up here, showing us a conflict on our chart. So we have that. We're above the 200. Okay, we have it also on our RSI. Let's take a look at our MACD real quick. So let me take this down, these two down. And so your MACD, moving average, convergence, divergence, it puts everything all in one. You ready? These are volume, okay? Watch this. What's happening with our volume here? So we see the RSI, it's kind of like the stochastic, right? You got your, now this is even more accurate, actually. Look what we have. Volume decreasing. Okay, this is how you find it. This is really this is your real indicator most real traders use. Okay, so your MACD, boom, volume is decreasing, even though we see it increasing here. Boom, we get our crossover here. Okay, back test this so that you feel comfortable doing it. We got our crossover here. Now, like I said, I like to change mine up personally. Red crossing over blue. So we're going to change that. So be careful when you're looking at, some people's lines will be different. It's your strategy. It's how you like to move. So make sure you change it to whatever you like and what you're going to remember. Okay. I like red crossing over blue. So red crossing over blue. Boom. So red cross under the blue gave us our sell indicator. Golly, look at that. Now this was news. Okay. So it dropped. Boom. Okay. So we would have looked at the news. We would have all this. So all of this is confluence. And then we had a what? We had a trend change. Okay. And then price came here. Once again, we have selling volume, but our selling volume tapered off. Okay. And then what happened? Let's look again. This was our flag being created. It crossed over. Okay, but we're still under. So now that we're under here, this is considered a downtrend. Anytime that price stays below is a downtrend. Price stays above is an uptrend on the MACD. Okay. So price came up, shifted over. Okay. We didn't cross into a new trend. Okay. What do we got? We got our crossover again. Okay. Potential for a sell. Okay. What happened? Volume decreasing again. Man, I'm giving y'all the sauce. I hope you're paying attention. It's going to show you every time. Look at this. Price increased here. Okay, it's going to show you divergence every time. So this gives us our entry point. Thank me later. Okay, there we go. Let's do it again. You can backtest all this. Okay, same thing. Below, tapered off our selling volume. Okay, selling volume is tapered off when it's a buying. Okay, so now we have buyers and sellers in the market. Now it's a battle between buyers and sellers. Okay, so we have price is doing what it's supposed to do. It's crossover. It goes over the histogram. Okay, this is our buying pressure taping off again. So our buyers, we don't have enough buyers in the market to make this go up. So no buying pressure here. Okay, it's trying again. So price came, consolidation. Okay, let's see if we see anything crazy. Normal. Crossover a histogram. So here we have new volume here. So what we're gonna look for, same thing. Okay. So now we're in real time. We just crossed over. Look, we have our 50 that's about to cross our 200. We're above our histogram. Okay. So we can potentially shift upwards for a little bit. So now you're just gonna look and see what happens. Or we might get our cross, price volume tapers like it's doing. Volume starts to taper. Okay. Letting us know there's not enough buying pressure. We get our drop again. Okay. So if you see the next time you see this tapers off, boom, goes into another one, but it doesn't create that high to go higher. Okay, let me show you that. Then we're gonna get our drop again. But let's go. Let me show you what I mean. Here we have an uptrend, for example. Okay. Yeah, price still went consolidating. You can see, well, I can see it, right? So here, check this out. See how price is going here upwards? Okay. But volume from here, the same thing. We knew there was going to be a change. Volume is tapering all the way down. Okay. So it's still showing us not enough buying to keep this going. So obviously we're gonna get a drop, and then you can see we're pretty much in consolidation here. Okay. I want to find a clear trend. Now, also, when we look at our 200, price staying above the 200 is an uptrend. Okay. And this is where you get that cross. This is where that cross comes in at. So you get that cross, obviously very delayed, right? We see this already happened, but we are now here. It comes in retest. Another opportunity to enter the buy, right? So let's talk about a couple things. And could be you just creating your strategy, okay? Once you understand the dynamics, here's your MACD. It goes above the histogram, so it's above. This is an uptrend. Anything above, so it's above your 200, above your MACD. Everything's looking good. You stay in your trade, okay? Comes down to your line again. You decide to enter again. Came to your 200, didn't break. You go into another buy, okay? Same thing, still above your histogram. Did we get a cross? Yep, we got a cross right here. Make sure the lines are muted here. Okay, same thing. So a lot of people use the 200 and the 50 just for this reason, to ride the trend up, okay? Ride the trend down. So guess what's happening? This is the 4-hour, long term, okay? Just like us looking at our daily. What happened? Price broke the 200, came up, created a what? High, lower high. Here's our lower low, okay? This could be our flag right here on the 4-hour. Then what's happening? It broke, may come back up and retest this area, okay? And then we can get our next drop as well too, okay? Every chart tells a different story. We can go to the daily, do the same thing, okay? On the daily, where is it at? Now on our daily, we have our 200. that price is sitting right above. Hence, this is why it's having some problems right now. So I feel like it's running to create some momentum up so that it can break the 200. But you see this, guess what's happening? We have a support and resistance area. What's been created in between our 50 and our 200. So it's done the work for you. So what are we waiting for? We're waiting for you to break out to the upside to maintain this on the daily if it's going to stay there, right? Or we're waiting on a breakout to the downside for this to continue downwards in a trend. Okay, that's a quick glance for you to look at. That's your 250 and 200. Okay, and then we talked about your MACD as well too. Using that as well to contribute. So in this, obviously we see markets moving sideways here. You can use that to your benefit with your MACD as well too. Now, your MACD is a lagging indicator as well too. So mostly a lot of people love to use the MACD. I like using the MACD for what it is. It's for convergence, divergence, finding volume, okay, that is doing something different than what it's really doing, right? Any questions so far about this? Let me see. To have a precise entry, you're going to use a smaller time frame. So from top down, you start with your daily, 4 hour, 1 hour, 15 minutes you can enter. But if you really want to tighten it up, you're going to enter on the 5 minute. Okay. So you're going to look for that precise entry on your 5 minute chart if you were to look for entry that way. So the difference between simple and exponential, it's based on the periods of data that is looking back. Okay. And so let's watch. If we change this, let's talk about the different inputs here. Right, so we have closed. It's based on the closed. Let's see, where's our exponential? No, not that one. All right, this will not give me the option to change it. All right, let's bring up an exponential to show you the difference. Oh, this one. They want me to upgrade more. Come on now. All right, your EMA. So here's an EMA. Let's turn it to a 200. See, so just a slight difference, right? Obviously, I think the simple, actually, you can see where price is actually, the simple is actually hitting the actual targets, right? So you can decide to use whichever one you want. Me personally, we use simple, but it's based on the periods of data that is going back. No, it's not the 5 minute. 5 minutes is, yeah, I mean, it determines what you decide you are, right? I think most people are day traders. What I mean by that, you want when you see profit, you close up profit. Now, a true day trader is going to close out all positions, no matter where they are, at the end of the close of the day. Okay. But yeah, 5 minutes. If you are a swing trader, you're still gonna look for five. You're still even someone who swings trade is still gonna look at their 5 minutes to enter the market. At a precise position. So you're gonna use your 5 minute. It's not that it defines who you are as a trader. Is that it's defining how you're gonna enter the market. Whether you're gonna enter precisely or just say, you know what, I'm gonna enter off the daily. Entering the market here, okay, you may have a huge swing to trying to enter this way, right? But you can enter the market this way, and your expectation is that price can still go up and go to the top here before it swings back down. Okay. But you're sure that overall, you're sure the position is going to go to the downside. So it doesn't matter to you because you're taking a much smaller position or lot size versus what you would do if you were doing intraday trading. Okay. Let me clear off my chart here. All right, so that's that one. Let's go. So moving averages, what's the next one we're going to talk about here, I want to make sure I get through all this. We talked about the MACD. We talked about, what else we made? We talked about RSI, stochastic. Trying to make sure I'm not missing anything. And let's go ahead and bring this, and we're going to do more on this one. I'll tell you, when I first started in trading, I started with the Ichimoku cloud, okay? All this is similar stuff, okay, when it comes to the moving averages and things. All right, so let's go here. Let's bring up the Ichimoku. All right. Now, what the Ichimoku cloud was created to do was it from the Japanese, it was meant as a first glance. Okay. And once again, the red lines, remember I said I have a thing that I do. My red line, conversion line, your baseline. When your conversion line crosses over your baseline, is either an indication for a buy or sell. And so basically what the Ichimoku cloud means, Ichimoku means quick glance. Oh, Bollinger Bands. Okay, let's go over that real quick before I go into this. Bollinger Bands are simple. Let's do that real quick. Personally, oh, that's another strategy. No, we don't do that one. What we have here. You know, you have these different strategies here that you can find on here as well too on TradingView, by the way. All right, let's take that one. We don't want that one. Traditional Bollinger Bands. All right, so same thing. Bollinger Bands basically create a zone as it goes around. So you can see price actually maintains the Bollinger Bands, right? So boom, here, price comes out. It doesn't come out much. Okay, so what is that telling you? Now, you can't just assume you can go into a buy because it hits the bottom of here, okay? But a lot of people like to use this. Okay, you can see price hit this zone here, price hit here. So yeah, this is pricing consolidation. So you have your downtrend. Price staying below your orange line represents a downtrend. When price crosses over, it's an uptrend with your Bollinger Band. So a lot of people like to use this the same exact way. Okay, so what do? Price starts here. Let's say price breaks my orange zone. It retests it. I can enter sell here. I enter my sell. Okay. And right, as long as price stays below my orange line, I stay in the trade. Okay. So let's say I sold and price hasn't, price kind of shifted up a little bit, but stay below the zone. Okay. Now this is a daily, so we're going to go to a smaller time frame, but you can ride this thing all the way down. So let's go to a more reasonable time frame. Let's go to the 1 hour. And so you're going to be able to obviously back test these. Let me get this strategy off here. Oh, no, that's not what we want to do. So now we're looking at the 1 hour. Okay. Now price seems to be all over the place in this 1 hour, isn't it? Okay, here we go. So obviously when price is below the orange, okay, you can change that any color you want. It's selling, right? So here we are. Price stayed below. Price is well below. So boom, we're still in that sell. Price is so far away from there. Selling, okay? Price corrects. Boom, still selling all the way down. A lot of people do like to use Bollinger Bands, okay? Then what happens? Price consolidates. Boom. Retest the orange. Okay. It breaks above that support level. Retest. Boom. Push up. We're in a buy now. Okay. Price stays above orange. We're still in our buy, still in our buy, still in our buy, still in our buy. Price is still in our buy, still in our buy, still in our buy, still in our buy, still in our buy. Boom. Price breaks and closes. We're out of our buy. Okay. Now price is below. If we wanted to, we can sell. Okay. Price shifts above. Here we are. We're above the line now, but price is really consolidated. Obviously, you need to see this. Price is moving sideways. Okay, so you can see it above, stays above support for a little bit, then breaks, stays below. Okay, eventually goes all the way up. If you wanted to enter off this retest, you could have. Boom, I entered a buy off of that. And of course, okay, we're in the outside bands, we're above. This will be, if you didn't have a stop loss in, you would have lost your account. Okay, but this is why stop losses are important. Price, boom, drops all the way down. We're below our orange line. We're selling now. Okay. So as long as we're below here, we're selling. Okay. No matter what price, then we're selling because price is below our orange line. So we just stay in our sell. Boom. Price comes up back to break even. Okay. So resistance line. Price drops. Still below our orange. Okay. Price shifts above momentarily. You would have been out of your trade by then, hopefully, right? Because now we're above the orange line. We're not in any sales. Okay, no sales. Price is sideways. Price moved low. And here we are now. So what are we doing here? Okay, so we did. Now, this makes it actually more simpler looking now that we break it down this way, right? So price shifted above our orange, retest this area. If you did go in for the buy, okay, based on your Bollinger Bands, you would have caught 30 pips there, okay, off your 1 hour. Okay, now price is coming back based off the outside zone. So it's giving you all your support and resistance, and you can see it maintains. So really, this is a very easy way to trade, okay? Because price went above, but price doesn't go too far. It respected the Bollinger Band, okay? Now it's coming back down, probably to retest the support zone, or it may break through, okay? But if it respects this and it stays above, I'm willing to enter a position off of that zone here, okay? Because we'll look for a buy up to the top, okay, or up into this next place here. Which if we bought here, stop loss below, we have a potential for 30 more pips, right? So definitely Bollinger Bands would be good for anybody who's intraday trading as well too, okay? So that's one strategy you can test out that I recommend that you guys put in your charts, okay? And then now let's look at our Ichimoku cloud. All right, so, and our time is good. We're gonna give you about 5 more minutes. So let's go over this real quick. You guys can test this. Man, when I first started, before danger was real for me, okay? All I would do, okay, for real, I traded this and I would trade all the crossings, right? If it crosses, and this is just very simple. If the red crosses below the blue, below the cloud, it's a sell. If the red crosses above the blue, above the cloud, it's a buy. Obviously, the bigger the time frame, the bigger the move. Okay, let's reset it. And so green represents your uptrend, red represents your downtrend. Anytime you see what we call the twist, right here, it's a change of the trend. Okay, now it's also lagging as well. You see price went all the way up, same thing, price went all the way up. Okay, came back in, retested this conversion line, and then we got our crossing. Now, this is typically considered a weak signal, but you could go into your sell here. So if you went into sell, obviously it's the daily chart, right? So going into your sell here on the daily from your just across, and what you can do is you can test this. You can go on all the charts. Let's see, that's 188 pips. Every time that we got a crossing, then once it hit below the cloud, this is considered your clouds are considered support and resistance. So the bottom of the cloud here, this is considered a support resistance line, okay? So for all of your cloud, every time you see your cloud do this, you see that? It's doing the work for you. So if you want to use indicators, yes, it does make it easy. You don't have to use indicator. I can use this indicator just to find all my support and resistance lines for me, okay? All the tricks of trading. Okay, so every time I see the cloud go straight like that, that is a support resistance area. Okay, let's find it again. Another one right here. You see that? Price rejects off of it. Let's find another one. This is for a quick glance, right? Another zone. Okay, another one. So it gives you all your zones here based on the movements in the cloud. All right, let's go clear that off. So let's look at this. So price also, anytime price comes to back up to retest the cloud, so anytime it breaks out of cloud, you're going to see also, people call this a breakout when it breaks out of the cloud. A lot of people trade breakouts from the cloud. So boom, you see price looked like it was breaking out here and then it went all the way back up and then it continued. That was 152 pips. So we go test, let's go see every time that it broke out of the cloud where it went. So price broke out of the cloud, retested right here, 255 pips. I'm just doing right now, we're just looking at the sell points, right? Price broke out of the cloud here, and we got a crossing, and we got our cross right here. So price just went all the way down, 1,500 pips. This is the daily, okay? Let's go find intraday opportunities and not daily. Let's go find real opportunities in the market, okay? But let's just see first. The first thing I look at on the daily, okay? We're in consolidation, okay? Price is at a support zone. Obviously, we can see that with our cloud, okay? But we draw it across too. And this is why I like to show you the basics before I show you indicators, because I don't want you to just depend on indicators without knowing why they're there, what they're doing, okay? Anytime it's in the cloud, you don't want to trade what's in the cloud, okay? That's the rule, okay? So what we're looking at is a breakout either out of the cloud, okay? Either that side or this side, Okay, this is obviously the daily, so we don't want the daily. So I just want to just show you where we were before we go to our smaller time frames. Now we go to our 4 hour. Okay, now remember, we're in the cloud in the daily. Okay, but if we're intraday trading, it doesn't matter. Okay, below the cloud, we're selling. Right now, however, we have a strong zone here. But what happened when it hit the cloud? Man, it rejected off of that, didn't it? Okay. Also, we have our signal line here. Typically, price will come up to here and bounce off of this as well, too. Okay. So you can find the different way that you can find opportunities in the market. Okay. But when you see your lines not doing this, right, this is not a good trading space right now, but it's because we're in consolidation. Let's go to a smaller time frame. Same thing. What's happening? Rejecting off of the cloud, isn't it? Which is really a resistance area. So rejecting off the cloud, we're in the cloud. But look at our signal line. What we're looking for below the cloud, if we get across below the cloud, we're looking for our sell position. Okay, that's on our 1 hour. Now let's go to the 15-minute. It's above the cloud. So we don't want to do this yet because in the 15-minute, it's actually showing it could possibly transition. So let's go because their move is going to happen on your 15-minute before it happens to your big time frame. So 15-minute just shifted above the cloud. Now, anytime that you see a thin twist like this, there's not a lot of confidence. Okay. When you see this, we may potentially have still a break. So price may shift up and it's going to go break through this cloud here. It's a thin layer of a cloud, what we call it. Okay. So when you see this, you're reading the market and say, man, I'm not really confident about this uptrend. It's still showing me that there's a possible breakthrough and there's consolidation here. Okay. The market is moving sideways. That's what this cloud is showing me too. Anytime you see a straight bed, this is letting me know there's no trend right now. The cloud is sideways. Okay. And it's giving you all your support resistance areas where price is rejecting off of. Right. So now we're looking at this. So what I would possibly look for. Now I trade, you see this right here, the green? So price may come and reject off of this is our first point of resistance. Okay, we look left, there goes our point of resistance. That was this right here. Okay, so you see I put my line right there. That's that green line right there. Point of resistance, no wicks. Real where price opened and closed at. Okay, and now we're waiting for it. Price is going to come up. If price comes up again, oh, wrong one. I'm versing so many indicators, right? We get a double top potentially and our continuation that we're expecting, right? Because remember, this is a lower high. This is still a lower high. Okay. So now my indicators are confluence is what we call this. I trade mostly without indicators, but confluence wise, the indicators are matching what I'm thinking. So what am I waiting for? Price may hit here. I can go into a sell here potentially. You know, it's a risky sell, right? But I go into the sell here, stop loss above. Let's see how we can write it down. How much would that give us if we decide to go in that way? That's 34 pips, 46 pips, and we get our breakout, our full breakout. Okay, we potential for 60 pips or more. Okay. Now here's what I'll tell you. There are currencies that don't move in 100 pip increments. So you got to know throughout the day how much your currency that you're going to trade, how much it moves. Okay. Okay. So for today, for example, this currency moved 50 pips to the upside. Okay. This is today so far. And so you got to determine how far does your currency move on a daily basis. So you're not over like you're putting in, I got this 100 pips. It's not what happened that day. So you may want to do 30 pips at a time to secure your profits. Okay. All right. So I think we get over enough stuff. I don't want to have this call too long. Juan, let me see. When using fibs, how do we look at candle closures? Do we wait for the 1 hour close or we wait for what HTF? What is HTF? Et cetera. You always want to wait for close, right? So this is like, for example, this is a Fibonacci. This is a open. This is a close. This is where I would run my Fibonacci. And you can do it you can do it in your daily chart once it's all closed out. So because they're all levels. So let's go and clear out all indicators. Let's talk about really quick fib retracements. All right, if we're just using running fibs, period. Okay, so your fibs is the third thing down, fib retracement. Okay. Your and what I'll do, we're gonna do a whole class on fibs, by the way. So we run our fib from the top to the bottom if we're looking for sell opportunities, okay? If we're looking for buy opportunities, we run it from the bottom to the top. So from the bottom to the top of here. Okay, I have two fib retracements in. So let's look. We're still thinking selling on the daily right now. So we went from top to bottom. Let me show you something. Your critical areas of interest between the 61.8 to your 78 is a zone that typically most traders look for, right? So you see our price went straight in that joker, came all the way back down. Okay, this is our daily. Now let's say we were looking, so let's get rid of this now. Let's say we look for a sell opportunity. Okay, so we run it from here, from open to close. Some people like to run wick to wick. I don't do wicks. I like to run it to the actual price closing. Okay. So now what happens? So this was our 6-day zone when we're selling, right? Price reject off of this. I'm creating a whole zone that you're about to see. Okay, now what happens? Price came down, corrected up. What zone did it go to? Let's see. I'm sorry. So we're from top to bottom. So where's price came back down to what? It came all the way back down to 100 almost, right? So this was our double bottom. But where did we really open at? Between the 61.8 to 78, okay? Prices in between those zones. So we have this. So here's our zone here. So once again, we run that. And here we go. Okay. Let's talk about fib tracing a little bit more. So I don't want to confuse you guys. I think I went too advanced on that one. Let's get rid of these zones. Let's just talk about how to run a Fibonacci and look for an opportunity. Let's go to the 1 hour. Okay. Here's an example. Now, obviously, I don't think that was news. Let's go here. So if I was running a Fibonacci and I want to know, instead of me doing a trend line, okay, this is typically your retracements are, you have your 38, on average, price will trace by 38%, 38 to 50. Your real zones that you're looking for a true sell is your 61.8 to 78. So we already did that here. So we ran from your lower high to your lower low, okay, in a downtrend. So look, that was our selling potential right there, okay? So there was our sell opportunity. Price came up. I would look for that. Boom, I sold off of there, and here we are, okay? And then take profit at 100 or at 0, okay? Or here's another one. Let's say we're looking, and then some people, I'll tell you a strategy that we learned is so we already ran our Fibonacci from here. We run our Fibonacci from all the lows here. So we run another Fibonacci from this low. Oh, it's wrong way. From this low to the same high. And what we're looking for is confluence, right? Or where price may mimic. So we're going to see where price may have a problem at, right? We can see here, see this area? Man, it's showing you where price is going to have the more these lines are as you do this. Okay, let's do it from this one again too. You can see where your strong zones are going to be at. So we're gonna have some issues here. Okay, price is gonna probably hit here, have some problems. Price is gonna have some problems. The price came up from here as well too. Okay, just giving some more strategy of how to find support resistance, because all you're looking for are support resistance areas. That's all that these Fibonacci's are giving you. Okay, perfect numbers. Yep, 61.8 to 78. That's what you're looking for. Okay. And of course, back test all this to see. Let's look at some other. Let's look at the 15-minute. Let's look at another pair. Actually, I want to use AUDC. Let's put that one. Remember we talked about, check this out, y'all. And this is what will happen as well. Remember we're in this, let's see overall where we were here, what I was looking at. Remember we talked about convergence? Let's look at the MACD. Buying pressure going down. Here we go here and here. And then we have our descending volume as well too. Divergence letting us know. So there's more indications, right, that price is going to reverse from this area as well too. Okay. Looking at our MACD. So what I want to show you is that I know this zone, it fell through, but then what happened? It went through where it's supposed to go because they know what do they know? They know that there's a gang of stop losses sitting here. There's orders sitting here. Okay. So they take all those orders out and then it shifts up where it's supposed to go. But what are we in? Okay. Now, if we define this, we were in a downtrend. Okay. We were in a downtrend. And then price started to curve out. And then we're not in an uptrend yet per se, right? Price is still in the zone here when we look at this. But you can see it's trying to create that trend here, right? If we call this a low, okay, and then it boom made a higher from here, you had a higher high, higher low, higher high, small time though. This is on the fifth, this on the 1 hour actually. And then we may be breaking out here, right? So really this is consolidation happening. This whole market is sideways right now. The price going from the top, bottom, so forth. Okay. But we expected it to go up from this support zone, but what it do came back down first, then it went above and went into where it was supposed to go to. And you'll get that a lot. So don't get frustrated when those happen. Just set your stop loss tight. And when it takes you out, no big deal. You enter when you're supposed to enter. Okay. What did you say when you place the fib for a buy? It goes, you know what? Yeah. Yeah, let's go over that again. Reset my chart. Let's say we were looking for a sell position. Okay, if we're looking for a sell position, we're gonna go from top, the high to low. Okay. If we're looking for a buy position, we're gonna go from low to high. So here's an example. Sell position to the lowest low. Okay. And what are we expecting? We're looking for price. Man, you see, just like clockwork every time too. Price went into that zone. What happens? It's selling. Okay. We sell. Okay. Now we're looking for a buy opportunity. We go from bottom to top. So buy, bottom. Sell from the top, buy from the bottom. So we go from bottom, swing high to low. Okay. And obviously the market's moving sideways. So we can see it went beyond our 61.78. Okay. And then it starts, once this happened again, then you have, actually, I'm sorry. I did this wrong. That's why. So our lowest point and our highest point we're going to go to. So let's say we're looking for opportunity between these two. Okay. Our lowest point to swing to our high. Wrong way. So for a buy, low to high. Okay. So we were expecting price came up, retraced back down, hit the 68.70 in between that zone. Okay. Shifted back up. And we can do this every time. We can do, if I'm looking for opportunity, because it does on every one. So let's go here. bottom to top. So we feel price is going to continue. Oh, so same thing here. So we run, if we feel that this is going to be buying, we're going to be looking for a buy opportunity, top to bottom, bottom to top. Here goes our zone. So guess where we're at right now? If this is going to be a buy, it will be here. Okay. So if I decide to enter, stop loss would go here. You can typically stop loss you want to take below your previous low. Okay, so you can take a stop loss here because if it's going to break, it's going to break, or you can tighten it up. He's like, I want a tight stop loss. Let's put it at this support level here. Okay. And then bam, you enter your trade. Once you get all your confirmations in there. There you go. Okay. And if you feel that, let's say that another candle opens up, now you can run. Now you're looking at where price can potentially stop at. Now I'm going to run for my sell opportunity, top to bottom. Let's say that is the bottom right there. So now I'm only going to take my TP. Let's say I take it up to the 50%, or I take it up to the 61% or the 78% because I feel price on the reverse here. So let's just say for safety, I just take it to the 50%. Okay, so what do I get? Look at that price zone. 10 pips. Okay. Obviously, we're looking for the break to the upside too. So that's how you use your fibs. I think our class went long enough here. Let me go and stop recording.